Thank you so much for joining me on the show today.
Great to be here.
All right, then let's start with that Eurobond and the plans for Nigeria to defer on the Eurobond. I'd like to make your sense of what you make on that call.
To be honest, I think it's the only possible alternative they had to do right now, because if you check the prices across Eurobonds, Nigerian and other sovereign Eurobonds across the world, you see that they've taken a hit. We're seeing Nigerian Eurobonds trading as high as 12, 13, 14%. At some point, you're even confused. Are you trading local security instruments? Because is that for a dollar investment, is that high? So if they wanted to go to the market right now, they'll be seeing upwards of double-digit interest rates, and I don't think we can afford that right now. So it's best to just put that on hold and see where the world goes from here.
All right, then let's look at the markets here in Nigeria this week. How's that played out so far?
Well, to be honest, the market is not isolated as regards to what's happening globally. So we're also taking a hit with what's happening. Everybody's selling down on global instruments in terms of looking for where's less risky in terms of when the world is going to get back on track. So right now what we're seeing is that we saw a lot of sellers last year, especially international investors, but that has calmed this week. What we're also seeing, T-bills is probably trading about double the 16-17% levels currently. So what we're seeing is a bit of local interest, but not in international. The internationals are just basically staying out of the market and trying to look at how they can source their FX to take back to their countries. So for now, also the bond side, we're having about 150 billion in bond coupon maturities over the next 2 weeks. We've seen about 140 billion, about 100 billion hits the system already. So that has brought a bit of stability to the FGN bond market. So we saw a bit of buying. Yields are coming downwards. Just local investors looking to reinvest their interest.
Well, we've seen more activity on the bond space.
To be honest, everybody's just looking for the highest yield. So much activity has been on the longer end of the curve, which has the highest yield currently. We're seeing the 49s, that is 30-year bond, trading at about 13.15 to about 13.5% currently today. So that's where the interest basically is. But from the 10-year to the 30-year maturity, so mid to long-term bonds that we're seeing the activity today.
What about Treasury bill space? I understand that we had some profit taking yesterday.
Yes. So we saw, it was a mixed bag of reactions. So we saw some people buying, saw some people selling. So in the morning, we saw yields come down as people were trying to buy at those elevated levels, because to be honest, at 18%, 17.8% low, those are fantastic yields, irrespective of what's going on globally. So we saw people try to buy that. But when it had gone down to a certain level, 14, 15%, we saw people saying, oh, fine, I had at 17, let me just sell. So it was a mixed bag of reaction, depending on which side you are playing on.
All right, then let's look at some data point that came in this week. Inflation figures came out 12.2%. Yeah. And I'd like to get a sense from you how you see that impacting, the markets and the trend that we've been seeing for inflation.
To be honest, we are coming from a low base where inflation was much lower in basically last year. So given that low base, we expect inflation to continue to be on the rise. And also given what's happening globally, people are trying to pump in more cash. We're seeing CBN offering 50 billion in terms of intervention funds and reducing rates on that. So by that amount of cash that comes into the system, we should see inflation gradually creep back up. But like CBN does from time to time. Also, what they've done is that they've not injected that money directly into the markets. They directly is to certain companies, certain SMEs, when you can show that, I'm trying to do this, I'm trying to do that, or some things that are necessary to improve the economy as a whole. So it's not directly, so it won't just affect the economy generally. But they're also trying to do that, not to allow inflation to go crazily at this point in time. But also, irrespective, you will still see inflation creep. Also, look at the FX market, where BDC, parallel market, was as high as 400 at some point last week until CBN came to calm down people's fears.
Because I was going to go to that and seeing how we're seeing more calm in that market now. But then looking at how it is doing, I'd like to get a sense of how the I&E window is faring, and obviously in foreign participation.
To be honest, where CBN is coming from, don't panic. This it's just what's happening globally. It's going to reduce. It's going to calm down at some point. Vaccines, you're going to see some ways that this COVID-19 will not spread as much as before. What CBN is saying, don't let us take long-term decisions on rather short-term situations right now. So what we're also CBN is saying, don't calm down. So they're trying to see how that market can remain around 367, 368 levels. So, but however, some people are still trying to price in, what's the general risk level of Nigeria? Why should I come in at those levels, since given oil prices, which was trading as low as $28 a barrel just before I left the office. So what you're seeing is that where buyers are looking to buy and where sellers are looking to sell is quite. So we're not seeing a lot more activity on that end. But at some point they will converge. But I think it's too early to say.
All right,
what will
that's all I
happen.
need to say. We'll see how it plays out. Thank you so much for
Thank
your
you
time
very
on the
much.
show. I've been speaking to Olugbenga Sonaike. He's a fixed income trader at Access Bank.